another episode of Cigars and Taxes. You have one of your hosts here, Layton Smith, with my gorgeous co-host, my wife, Stacey Smith. Thank you for joining us today. We have an interesting topic today. So today we're going to talk about can I fix my tax return if I make a mistake?
Common question.
Common question.
Common question.
All right. I done left off 8 W-2s. And the next thing is, right, you had 8 additional W-2s. How the hell did you?
And how did you leave that off?
Yeah, all of them, right? Anyway.
Was that an accident or?
We're not even going to jump into tax avoidance. I'm not going to do that. But today's episode is, can I fix my tax return? I'll make a mistake. This is Cigars and Taxes. We are partners at Hoffler Smith Financial in Cherry Hill, New Jersey. We're both IRS, EAs, enrolled agents. We have been doing this for 23 or 24 years, 24. Something like that. 24. And, we bring a unique mix of knowledge, intellect, actual experience, and calming, resolute answers. Yes. So, all of that being said and done, like I said, my name is Layton Smith. We have the highly intelligent Stacey Smith here. She is a walking encyclopedia. I bring a unique viewpoint to this. I am an accountant. I am an EA. I am, as of a year ago, a burn survivor and an amputee. So I bring a unique mix of knowledge and perseverance to the table.
Right.
We can overcome any struggle, any fight that's in front of us. All right, let's rock and roll.
Okay.
You ready?
All right. I'll do it. Yeah.
Wait. Yeah. Cigars and Taxes. I have a glass. Our episodes, we try to recreate our time in the cigar lounge, talking to friends and folks that get dusted and walk up on us with accounting and tax questions. So today, I have with me, it's been a hard day, guys. Very hard day. Okay, so I have a glass of Albini 14 Caribbean cask with one piece of ice in it to open it up a little bit. And I am smoking a Oliva V Maduro. Oh. And you have something chocolatey looking right there.
It is chocolatey looking. It's an espresso martini.
Espresso martini.
With Kettle One. So that's what I have chosen today, because although part of the day is done, I've got a few more things to do.
And work never ends, right?
And it doesn't. And
after you spend enough time in the cigar lounge, I think we decide not to go back. Well, we don't go back to the office.
Well, that's true.
And it's always an effort to open up the laptop when you get home. What are you smoking on?
I'm smoking on a Java by Drew Estates, the cafe latte.
Nice.
Yeah. I like the infused cigars, the ones that are a little bit sweet, and this is one that I choose often.
That's it. Mm-hmm. So, as a side note disclaimer, a little bit of housekeeping. These episodes are meant to be fun and informative, very informal. So, anything that you hear that you believe might be something that you can use in your own financial situation, please talk to your financial advisor, tax attorney, run the scenario by them, make sure that it is an appropriate use of knowledge for your situation.
Just because this may be an option that's out there and that's available doesn't always mean that it's the best for your situation.
All right, so let's get started. So here we go. The topic is, can I fix my return if I made a mistake?
That's correct.
Gotcha. So I will let you start, but just to give a little brief of how do we normally hear this question, honestly, it'll be somebody who walks up on us at a cigar lounge and they're like, my wife did my return, and I think she forgot to include a 1099. Or we don't really hear it the other way. Normally when it's the wife coming up, it's more like, I hate my dumb ass husband. I don't even know what he's doing with our taxes. But I think he left a 1099 off the return that was like $120,000. And it's like, really? You left off $120,000 1099, just
Hey,
forgot that altogether. Forgot the 1099, forgot to put the Schedule C on it, just forgot all of that.
I have seen it. I have seen it.
The other one, how we get this, is when we have folks that come in and, you know, they ain't making fun of nobody, but a lot of times I'll see it with certain nurses and they work at a bunch of different health cares.
That's
Yeah.
yeah.
And
Yeah.
they'll come in and they're like, you know, I think I left like 4 or 8 W-2s off my tax return. It's like, how this shit? What? You left how many? That W-2? First thing is, how'd you work that many places?
Listen, they work hard. They work
Yes, they do.
hard.
Yes,
They
they do. Yes,
they
they
work
do.
hard, and we know that.
But that's the first giggle right there. Like, how many jobs you got? Anyway.
No, stop.
All right. Let's stop with the goofy stuff. Okay, Stacey.
So I guess the question is, can I fix my return if I made a mistake? And the answer is yes. And this is really talking about amending a return. That's what there's a mechanism, a form that you have to use to send into the IRS with showing the corrections that you're making, and then basically attaching your revised tax return. And you should be looking to, if you have changes in deductions or your filing status or your income, as you so mentioned, you may want to be looking at amending your return. It really is going to determine on the IRS is really looking for a substantive change. So if you transpose numbers on your W-2 and the difference is $20, you don't necessarily need to run and do an amended return for that.
So that's not substantial.
That's not substantial.
Now, the big question is, I know what y'all wondering, what is substantial?
Yes. We're going to get into some of those little things.
Yeah, I'll be honest with you, I don't know that off the top. But I mean, I know I wouldn't worry about $20.
No.
But still, you know,
But
you
I've
get
had
yourself a
people do
CP
that.
letter for
Yeah.
$20 now. You know, it literally costs the IRS more to mail all that to you than what they're going to collect.
This
But
is true.
we have seen it happen.
This is true.
All right, I'm sorry. Go right ahead.
No. So if there's a substantial change in it, when you are submitting that return, you may need to send in supporting documents, and it'll depend on what it is, but you may need to do that. We always suggest that if you're doing an amended return, that you do check with your tax accountant, because they can give you a lot of guidance in terms of, is it necessary for you to do an amended return? And if you do it, what the time frames are, what you need to include when you're submitting it, all of those details, they'll help you get through. Okay? Did you want to add something? Yeah.
I mean, you just covered most of those points. I'm just thinking situations we've seen this. So we're talking about amending the returns, and we're going to get into whether you are voluntarily making this adjustment
Correct.
before the IRS figures out that there's an error with the return. That's two different situations there.
I think it's worth.
Sure.
I think it's worth mentioning that we do have our practice. We focus on tax resolution, tax resolution and tax planning. So we get a lot of these situations coming in our door. People will find us on Google and whatnot, and there's all different scenarios. Honestly, I feel like you name it, we've probably heard it or something similar.
Oh, I would honestly say that most of the situations we see where there was information omitted from the return, they've received one of the IRS CP letters. So they received either that CP 2000 or that CP 12,
Right.
or the CP 22.
Yeah.
You know, they received one of those. I don't know that I have seen many situations where we had clients, if they omitted information up off W-2s, it's just because they're nervous.
Yeah.
They already know they did it on purpose.
I think some, to be fair, I think some, it might be that it came in the mail later, or maybe they worked there in the beginning of the year, they forgot, and so when it came in, so there are those situations.
Okay. So one of the things is, let's just say you left off W-2s. And we need to turn around and amend the return because let's just say there was 2 W-2s, okay? And one W-2 had $45,000 on it. Second W-2 had another $45,000 on there, all right? One got omitted.
That's a significant amount.
There it is, but that's what we've seen. I've seen that in the previous years.
Okay.
And basically, because there were children on the return, Schedule A on the return, before the Job Cuts and Tax and Cuts Act, 16 or 18, whatever year that was that came out.
Right.
Trump year. 18. Yeah. He's a walking encyclopedia, guys, seriously. So, before that, they filed a return, one W-2, $45,000 on it. Turn around, they qualify for different credits like child tax credit, maybe earned income credit. They have the other deductions that they qualified for. Even back then, we had like that, the child tax credit. And I'm thinking about something different. The daycare deduction. Yeah, those pieces. It qualified because that one W-2, that amount of income. Now, all of a sudden, you add that second W-2 and they do not qualify.
Or the amount,
those credits.
Or the amount that they get is substantially reduced.
Substantially reduced.
Yeah.
They run around, had like 3, 4 kids, something like that, and got themselves like a $9,000 refund, $10,000 refund. You turn around, add that other W-2, and they had a $2,100 refund. That is something you want to get in front of quickly.
Yeah.
You're jumping to the time frame for filing the amended return, like from the time you file, like
that was
years. That's okay. I won't mess that
No,
up.
you're fine.
One of the things you want to do is you want to make the adjustments to that return on an amended return, a 1040X, before the IRS sends you a CP 2000 underreported letter, okay? Because at that point, that's just an assessment. That's a proposal. But that proposal will also have penalties on it for this particular type of mistake. Whereas you amending the return yourself, you might still get penalized, but you could probably get an abatement for that. You could probably get abatements for the CP 2000 letter also. But jumping in front of it is always better than reacting. So being, in front of this problem, proactive is better than being reactive.
That's true.
I was really searching for that word. My head was just spinning. Being proactive.
There you go.
There it is.
It's worth mentioning too, guys, if you've left income off your tax return, we get people that say, well, what if they don't notice it? They're going to notice it.
Yeah.
They're going to pick that up.
It is not 1972 no more.
Nah.
Okay.
They're going to pick it up.
It's going to happen.
That's it. So please, let's not even think in that Alice in Wonderland sort of thing. They're going to pick it up.
But, this also, we're dealing with all this tax avoidance here. Let's give an honest mistake, okay? Just have a quick sip here. An honest mistake. So, we get folks also that dang cryptocurrency. Oh, that is just the devil's playground. Oh, my God. All right, so either way, we get these folks who, they didn't include anything of the transactions for their cryptocurrency on their returns. And they're like, well, I didn't make anything. I put like 15,000 in. I got like, 14,997 back. It was nothing.
Right.
And they don't include that. And then what happens is a year goes past, and then all of a sudden they'll get that CP 2000 underreported letter saying, you left off this $15,000 in crypto earnings. And they'll come in the office like, I didn't earn that. I literally broke even. But it needs to be shown on the return.
You have to show it.
It has to be there. We have to show those transactions on the return. We need to show the money's going in. We have to show the monies that were pulled out. Normally, we would get the schedule from whatever brokerage it is, or some of them don't even have that. We had to go back and pull together Excel sheets of showing the transactions, money going in, and monies that got pulled out to show that there was no gain. But that's a bit of an honest everything that I said is an honest mistake. We're not, assuming that somebody is doing this on purpose. All right.
I have another honest mistake.
Sure.
That there was a point. So we live in New Jersey, and we have a good number of our clients that are in New Jersey. And there was a point, I think actually during COVID, where there were several people that were on unemployment that weren't previously, like this is something new for them. And they were expecting to get the 1099 for that unemployment income in the mail, like they do the rest of their 1099s or W-2s. And New Jersey does not submit it they don't send it out that way. It's always online. And some of our folks, some people, they're not expecting that, so
They forgot about it.
they forgot about
They
it.
forgot about it.
They basically forgot
in
about it.
previous years, you always received that form from showing your unemployment income.
Right.
But New Jersey, Connecticut was
Yes.
also like that. New York still mailed it out. But I think we have Rhode Island
Yeah.
and maybe Maryland. I don't remember.
Each state has their own
But they
specific.
were not mailing out those forms. And these individuals, they left the form off.
Right.
Now, it was also that thing back then during COVID where some of the unemployment was forgiven. Like the first
was 10,000
of
with it. Yeah.
So some people was like, oh, but unemployment was forgiven. It's like, yeah, you got like 28 grand, bro. No.
Well, and to be fair, some of those people, because they didn't make that change until I think it was early March that year, so several people had
they had
come in.
filed before.
Exactly. So, in any case,
That's an honest mistake.
there are honest mistakes that get made.
Individuals were on unemployment and they forgot they were on unemployment. They're expecting all of their tax documents to be mailed to them. And now here you go with these tax documents that are not mailed to you anymore.
Right.
Same thing.
Yes.
Well, I will say, in the IRS defense, I'm not on their side.
Here we go.
Mortgage companies, a lot of them don't mail out those 1098s. They want people to go online and get them for your mortgage interest, your property taxes and such. I really don't ever see anybody forgetting to go online and get their mortgage interest. And
Well,
taxes.
I think that the mortgage companies, you have to elect to have paperless or non-paperless.
That's true.
And if you're paperless, you better be going online to get whatever you.
Sorry, I was just being a butt with that statement. That's all.
I know.
All right, let's get on topic.
Okay.
I've been fooling, so
Yeah.
let's
I've been going along.
wait a minute. So we let's take a quick breather from all this knowledge that we have been giving. Really, really good cigar. I love the hop of these. I do. Well, hold on, I do. And I just have to say, Stacey hasn't been drinking. This don't happen in the cigar lounge. She's been sitting here just rapping and rapping. She hasn't been sipping. It's been a hard day.
Oh my
We're sitting here in
goodness.
the evening.
Is this peer pressure?
She's not being honest. The
This
cigars
is
and
peer
taxes.
pressure. Oh my God.
Mm.
Really?
Well, you know what? In the show's defense, we got to figure out some stuff too.
Oh my.
When we go to put up our little clips and everything, I think certain episodes we had like the bottles of liquor out, and they just got like flagged. It was like, okay, so shouldn't have bottles of liquor out. Don't take complete pictures of the cigar you take and just have it in your hand. And then the wonderful folks are our pre and post production folks in Florida, Donald, TSE Studios.
Yeah.
Love those guys.
They are great.
They turn around, they just go, yeah, look, don't be putting pictures of all that in there unless they go on a sponsor episode. So let's wait to the sponsor episode.
They did say that.
Once they sponsor episode, we show some pictures. Outside of that, flip them the bird. Don't be giving no free advertising. And I'm sitting there like, all right, we got like 12 listeners. Okay. All right.
Maybe
So
a
this
few
episode's
more.
going to be 2 hours long.
Oh.
Come on.
All right.
Where we're at,
So deadlines.
Take a sip first.
I just did.
Okay, so that's on camera.
It.
People listening couldn't hear.
Oh my gosh, this peer pressure is a real thing.
Here we go.
Oh my goodness.
All right, we reloaded. Okay. Let's do this.
All right. So there are deadlines for filing your amended return. Okay. And this is more of, so we're not, in this case, we're not talking about you receiving a letter and now being inspired to amend your return. If you feel,
You just got shook.
it shook a little bit. Yeah. Inspired.
Six to the left. IRS in the state did.
Yeah.
Yeah.
Those letters are pretty scary. They're designed to do just that.
Yeah.
Shake you.
Yeah.
You know.
You might have made a mistake, but we're gonna fix this right about now.
Yeah. The huge bold lettering. You owe.
Well, no, the first letters that come out, they're just proposals.
But they still say that, though.
Yeah, I know they do. They do. You give you 30 days, or you're gonna get your notice of deficiency,
You better
and then
figure it
after
out.
that assessment, you just owe it. So
Better figure it out in 30 days. Yeah.
Yes.
All right. So you have 3 days from the original due date for the original return, or 2 years from the date that you paid your taxes.
Did you say 3 days?
Did I say 3 days? 3 years.
3 years. 3 years. Yes.
All right. Let me review that.
3 years from the date that the return was due. No, date that you filed the return, right?
The due date.
The due date of the return.
You have 3 years from the original due date of the return. So in most years, that was April 15th. It's not all years. Sometimes it's April 18th. During those COVID years, it was all over the place. But basically, April 15th of that year, 3 years, you have to file your amended return. Or 2 years from the date that you paid the taxes. So if you owe taxes that year and you made the payment, I guess, a little bit later, you have...
Or you on an installment.
Or you're in an installment.
Mm-hmm.
Right. 2 years you have from that. So I wouldn't wait 5-6 years or I'm going to get to it. You want to be mindful of that. Again, if you're dealing with a tax accountant, they're probably going to be up on when you need to be filing by. So use them. So I wanted to go over some, common errors. We've been kind of joking around a little bit about different scenarios where you would want to do an amended return, or how the scenario could even come up. So we thought it'd be good to have a list of some common scenarios where you may want to do an amended return. All right. So incorrect personal information, like your social, sometimes people transpose their name on their social. Or
I wouldn't do an amended return for that.
Yeah.
So if you had, you're thinking like they filed the return, but they mailed it in.
Yeah.
If you try to file electronically, the return would just get rejected.
So that's another thing, because some of these things that come up, it's now that we're able, and the IRS is really pushing, and most of the states are pushing for electronic filing, that eliminates a lot of the typical mistakes of old.
So what we're doing right now is Stacey, the encyclopedia, she went through and she grabbed all of the IRS examples of with an amended return. But IRS is dated.
They are.
As far as the social, I would not file an amended return for social. What I would say there is, if you try to file electronically, you had the wrong social in there, or let's say the name is not right, it should get rejected. Okay.
It should. But there are times if the social is actually,
I have never seen an amended return where you amended because of the name of the social. But, we're not going to dwell on that. Sure.
But personal information like that, and then filing status error, you may want to be really looking at that. There's so much that's wrapped up into that.
That is.
It really is.
That is very tricky right there.
But your filing status, meaning whether you file single, married filing joint, had a household, or married filing single, married filing separate, like your filing status can make a huge impact on your return.
I don't normally see that. So just to touch on that, let's say you filed a return and it's single because you forgot you had kids. Okay. And then you go back, now you're going to amend it at a household and you're putting dependents on the return. Sometimes you can see that because sometimes you'll have individuals who are divorced. Okay. So now they had a household, but let's just say a husband and a wife, they flip years. The even years, the wife claimed the children. The odd years, the husband claimed the children.
Right.
And we've had situations where it was an odd year and the wife claimed the children, or an even year and the husband claimed them by mistake because they claimed them last year. And now you need to amend the return. And that's just to understand how that works. I'm giving that example because you take two people who were married, so now they're divorced and they have children. So the person that's married, they were married. Their father had a household with their child. Okay. The other person that's following had a household qualifier. They're not claiming the child, but they are using the child to be in the head of household tax bracket. Then we have the issue where 1 year they come in, we forget that they're not supposed to claim that child. They shouldn't be head of household that year. They should be head of household qualifier. They don't mention it. And now we got to go back and we have to amend the return because they claim the child, but it was the other ex-spouse's year to claim the child. That's the situation we see that in, where the filing status.
I also see it sometimes where if it's somebody that's coming to us brand new and they've been filing their return on their own, I have seen it where they will put themselves, they've been single and now they have a child on the return and they won't change the filing status. It's weird. I actually didn't even... Single. Yeah, I've seen that twice. It seems odd because I kind of think the software should pick that up.
It's not odd. That's one particular software that does that we're not going to name.
Oh, okay. Okay. I was like, how did that happen?
One particular software, okay, and we're not going to name, but it is the one that says you can file your return for $8.99. That ain't ever true.
Oh,
all right.
Okay.
It normally jumps up to like 115 or whatever
so
it goes up to.
So then it's not the one that says...
Don't do that. 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 No, it is one software that makes that mistake.
Okay. So, all right. So fair enough. I've only seen it twice, but it was weird.
It's the same damn software that does that.
All right. Well,
that's good stuff.
Come on, now you gotta get what you pay for. All right.
Oh, yeah, you get what you pay for. Stop fooling around, y'all.
All right.
Trying to told you, as my mom would say.
I have math errors on here. But again, the software typically takes care of math errors. What I think more of it is you not doing the data entry correctly. So it said 10,000 and you put 1,000. You left off the zero, something like that. So in that way, it seems like you can have an issue.
So math errors is something that was very common. That was like 15, 20 years ago. 20 years ago, so let's go back 25 years ago, and in our Connecticut office where Stacey's father runs that particular office. Look, listen, this dude ain't never see a computer he didn't like, or he don't know how to use them. And he was straight in that office with the forms from the IRS and a number 2 pencil.
I learned to do taxes that way.
We all did.
In high school and college. And he said at that time, now that was a minute ago, we don't need all that on computers. You can't trust them.
Yeah.
But so many people did at the time. At the time, that was like mid-'80s or something. So that was good.
One of my proud moments. I came into the family, and he allowed his disdain for doing returns on computers. He allowed me to put computers in the office. Wire the office, put computers in the office. And he still didn't damn use them, though. But he had computers in the office, so when people walked in, they see computers.
No, but he did.
He used to have that Tandy computer he had at the front desk.
There's a few people that had those at one point.
It's like,
TRS-80s.
The TRS-80, did he come out like the early 70s?
No, they were 80s. They were 80s.
Listen, you walked into, before this was Hoffler Smith Financial, it was Charles E. Hoffler and Associates. Literally, you walked into that front office, and they would have a Beltron Turbo XT computer sitting right there with the receptionist like she's working on that thing.
See, you know what? You just stop talking about.
Oh, they just 1, 2, 3. I'm gonna stop talking about Papa. Love him to death. All right, we got off on a bad tangent there. All right.
But
so we were talking about math errors.
Math errors and how we don't really see them into the same degree now that we're really using software, using electronic filing. So that has eliminated a lot of that. But it's one of those where it's kind of garbage in, garbage out. So if you are in your data entry, you have an error with transposing numbers, leaving off a number, then that's going to mess things up for you. So you'll want to do an amendment.
That's it.
Okay? And missed deductions or credits. Now, you're definitely going to want to do an amendment for those. Because those are things that can help you. So either by reducing what you owe or increasing whatever refund you have.
And so a lot of times, it's called the CP12, where you receive a notice that says there was a change to your refund because there was changes to your credits and or deductions, and it can result in you having a smaller refund or a larger refund. Okay, that's a CP12. And to be honest with you, sometimes when you make those type of math errors or omissions, you leave off a deduction that's given, you'll see the CP12. I don't see too many CP12s.
I literally don't either.
I think it's been 20 years since I see the CP12.
I don't see them that much either. And whenever we do see one, we say, oh, look at that.
Sign that. Sign your name on it. Say yes.
Yes.
And get your extra $1,200.
It's not typical at all.
And next year, come here and let professionals help you.
Yes. Yes.
Yeah.
Yes. So.
All right. What else you got?
I have. Let me see what's next on my list, because it's a list of them.
She didn't put her little notepaper down. She took a sip. Now she's loosening up a little bit. All right.
Incorrectly reporting your withholdings or estimated payments. That's so whether that's plus or minus, you underreported or you overreported. More often I see that it's overreported.
Yeah. All right. So an example. This is a good one here. All right. So I'm going to jar up in the office. What happened now?
I think we have a few examples on that. But yeah,
right.
Go ahead.
I'll give the best one.
Go ahead.
Just sitting on right on. Here's this Joe for walking the office. And it had estimated payments last year. Let's just say they're supposed to make $5,000 estimated payments. So for the year, $20,000. Okay. And for whatever reason, we're just picking up that they made estimated payments of $20,000. It should be verified. We should have canceled checks. Sometimes we don't go through all of that with the returns. We just, did you make the estimated payments? I made that estimated payments, $20,000 sitting there. And then we will get that CP22A, I believe it is, that'll come in and it'll say, you did not make $20,000 in estimated payment. You made $5,000 in estimated payments. And it will go, what the shit? Wait a minute.
I think it's...
You have 4 coupons that send in $5,000 each. And they go, I thought I did pay all of them. I only paid the last one. And it's like, bruh, really?
Yeah.
Really? All right, so there's a $15,000 change.
Right.
Real easy in the return.
Or sometimes it's with their extension. You know, they might say, oh, what, I made $5,000. You know, I did that with the extension. And we just, you know, we'll take their word, you know.
We didn't do the extension.
Yeah, we would, you know, and when we do the extension, if we're not, oftentimes the client will go online and make the payment themselves, but we ask for the confirmation.
Yeah. And one of the issues we've seen there, I think I've seen it a few times. We've had folks, and we're just using this round number, 5,000. They filed the extension, they send in $5,000, or when they go online, they make that payment for $5,000. So one of the things that we see is they file the extension, and then they make a payment to be applied to the current year with the extension. They go online to make the payment, but let's say they're on an installment arrangement. Okay, they owe $40,000 still. They send in this $5,000 payment. It's not actually identified as a payment with the extension.
Right.
It's applied to the previous year. So that when we turn around and file the return and we're picking up that there was a payment made on the current year of $5,000, it'll come back and go, no, there was no payment made. There's no fix for that. We
Nah, it's
cannot
what it is.
amend a return and have $5,000 taken off the previous year and applied to the current. That we've never done.
Because you're then amending the payment.
Yeah.
That
We don't do that.
we can't do that.
So basically, they just pay $5,000 for their bill. They owe for the current year, probably, and then we do a new installment arrangement for the full amount.
That's true. I have also seen too, though, with married filing joint couples, whoever the primary is on the return, so meaning the first person who's listed, if it's the spouse instead that makes the payment, sometimes the IRS is a little slow picking that up. So I have seen that.
Say that one more time.
So let's say Tom and Mary are filing their return.
Damn, you didn't just go to Tom and Mary's filing the return. Okay.
I'm just saying, Tom and Mary is filing. I'm just making sure that I'm saying it correctly.
No more questions.
Tom and Mary are filing a return. They know they're going to owe, and so Tom is normally first on the return. Mary goes in and makes the payment under her social. I have seen times where they get a letter, and this is for a few things, whether it's estimated payments, whatever it is, and they're saying, we don't see this, we're making an adjustment to your account. I've had to call specifically.
The money sitting in escrow under the other spouse.
Correct.
Yeah, I've seen that.
Correct.
Yeah, I got you.
Correct. Yeah. So if possible.
Odd things, though.
It is odd, but the thing is, I never know who's listening. So I just want to just mention it. Usually it's an easy fix if you have the confirmation, which I'm sure that you do, and you take the time to get on the phone, on hold for however long it takes to talk to them.
That's it.
And that's it. But usually they'll make the adjustment. You know.
Perfect.
Okay. Failing to report life events, such as getting married, having a child, or buying a home. Now, this came up as a possible thing.
We're going to jump into that one right now.
Okay.
But just a side note for all the folks sitting out there having a smoke and a drink listening to us going through this.
Yes.
You know, for some of you young kids, the ones that are actually watching this on YouTube, I'll help you out for a second. You might have seen me continuously, wipe my clothes because a little ash fall. Cigar etiquette 101.
Oh, boy.
Number 62. As you're smoking and you have a little bit of ash just fall on you, you should continuously be wiping it off. Now, you don't have to be special like some of the people here at the Summers Point Cigar Lounge in Summers Point, New Jersey, where they got like little flipping brushes just continuously brushing themselves.
Do they do that?
It's a couple of them down there that's kind of like that.
Oh, well.
Don't worry, we're going to get some of these jokers on camera so you can see this mess. But they're cute with that. You don't have to do that, but you do brush it off of you. Other thing you're going to need to make sure of, get the ash off your shirt before set. Let me tell you something. I have like 9 or 10 shirts at home. They got a burn here or burn here or burn right here. And they're my outside on the patio smoking shirts. And it always breaks your heart when you have a custom shirt that you can pay more than a couple dollars for, okay? And you got a hole right here. And it's like, damn it. Okay.
That should. Okay.
That was our public service announcement.
There's another public service announcement. Okay.
Yeah.
All right.
So what were we about to hit? What was the point we was about to hit?
You were about to expound on the life events.
Life events.
Yes, like getting married, having a child. And the funny thing, for me anyway, I don't typically have individuals who forget to put their child, their new baby, on the tax return. If normally they can't wait. It's
yeah, but they just got married. They don't understand exactly the situation, the previous situation with the spouse. Then they come in. Do I have to honestly file with him?
Right.
He just told me he filed in the last 8 years.
Yeah.
And it's like,
or
ooh,
I think there's a child support issue.
Oh God.
Do I kind of want him to work that out first. So what can I do?
So now we're talking about tax planning and tax mitigation, and we're not going to get into that on tape.
No.
No.
No, I mean, we can get into it, but not right
what
here.
we could do is
Not
if
right
you have
here.
questions because you just got married and you don't understand the obligations or liabilities that the spouse has from previous years, there is an email, info@cigarsandtaxes.com. You could definitely send a question and we can respond to that in the
Absolutely.
appropriate fashion.
Yeah.
But yeah, that ain't something I want to touch on.
Yeah, we have consultations on this all the time. It kind of do's and don'ts, pros and cons to the different options that you have, and you should know those. Yes. So
our kids will be perfect with that. As soon as they go to get married, LJ over there gonna be like, all right, so can I please have your last 7 years of tax returns? What are the prerequisites?
Oh my gosh.
We have no money, so there's no prenup, but there will be prerequisites here. I need to see the last 7 years of your filings. Ain't that right, LJ?
Oh my.
He's just shaking his head.
Oh,
He's so adorable. All right. What else we got?
Okay, so the last thing is just the consequences of not doing an amended return when you probably should. Okay, and I think we've hit some of that already. You get an inaccurate.
You're going to go to jail.
Wow.
I'm joking. So there's really not many times where you can go to jail because of there are.
There are
issues where
some.
you can.
Yeah.
But most things can be mitigated. So that's just a scare tactic, and I'm just feeling kind of nice and wow people right now.
There we go.
Yeah. All right. Go right ahead.
There may be additional taxes and penalties that you'll be assessed. So the longer you wait to file the amendment, the more of it, the more of those things that will accrue, I guess, is the thing. It makes sense, as Layton said earlier, to get in front of it, to be proactive. You have more options when you're on your timetable, meaning you've initiated this action, versus waiting for the IRS to do their thing.
That's it.
Okay. You might miss credits and deductions.
Mm-hmm.
Who likes that? So we want to.
You just said who likes that?
Who likes that? Oh my gosh! So I mean, that's a consequence, though, if you don't do the amendment to make sure those things are included.
Yeah.
All right.
Yeah. So as an example, and we're gonna wrap this thing up.
Yeah.
We've had people who've come in the office and they literally haven't filed like the last 10 years. Okay. Mm-hmm. But the last 3 or 4 years, there are refunds there. Now they want to try to grab those refunds, but they ain't filed the years before.
Right.
And what happens is we pull together those returns, send them in, and the IRS will hold those refunds until the other returns are filed.
Exactly.
Now we got to go backwards and we got to file these years. And let's just say they had 1 year from 15 or 14 that they knew they owed. But the next 2 years they thought they could have owed, but they didn't. So they just been hiding under a rock, like literally.
Right. Right.
Look it up.
Like that.
And basically we go forward, we file these years, and one of the issues, these old years, we always try to do cute shit, which is, we'll file the year we know they owe, we know they're going to get assessed, they owe it, there ain't going to be no statute of limitation deal with that because it's just filing the returns now.
Right.
And we'll try to file those other years they got the refunds for, that's owed too. Mm-hmm. And we'll put on there, we don't want the refund, we just want to roll to the next year, hoping that they'll just receive credit for it against the year that they owe. But it's like a flip of a coin, man.
Yeah.
Half the times it come back where they owe for these years and they've been assessed for, let's say, 10, 11, 12, or 13, 14, 15. They had refunds, and then our statute of limitations were just allowing this refund.
Right.
And it's like, you can't appeal that. You can't really fight that.
Right.
Or maybe there's some cute tax attorney out there who knows a way to do that. Personally, I have not found a way around it when they're being disallowed for statute of limitations, but the years that they owed because they're filing them late, they're still being assessed.
Right.
I mean, that's one of those things that, because you're hiding under a rock, you don't know what's there for you, and you lose the opportunity.
You do.
Yeah.
You do.
Yeah.
And so I guess one of the key takeaways is as soon as you do know that there's an issue, let's try to act on it and get it addressed.
That's it.
So,
in closing, I think we're closing now, right? As always, this information is intended for general tax purposes. Please check in with your financial advisor, tax attorney. This information is information, and it's meant to be given in a very informal fashion. We are in no way, shape, or form saying that some of these theories could apply to your situation. Talk to somebody about your particular situation and get the help that you need.
Yes.
And while you're doing that, have a cigar, have a drink, calm yourself, and get ready for the answers.
For the anxiety to go down a little bit.
Anxiety to go down just
But
a little
to be
bit.
honest, every situation is workable. Okay. And sometimes just having the resolution and having a direction path that you're going, that kind of brings it down just a little bit for you anyway.
That's it.
Okay.
And then not being afraid of it. You know, some of the best conversation, well, we have a lot of conversation with clients in the office, but some of the best meetings with some of these wayward clients we've had, we've had dinner over. We were taking maybe Capitol Grove. That's across the street, or right around the corner from our office, Capitol Grove. Have a little bit of steak, and then we'll go have a drink and a cigar, and we're going over all of these problems. And I'll be honest with you, when you have a good stick, when you have a good beverage in front of you, this conversation becomes very, very easy, very, very laid back.
Well, the food helps too.
It helps too. Unless you're sitting there saying, after all that hell you done called, you can't pay none of your life.
Yeah, that's a whole other
That's
conversation.
all that conversation.
But all that being said and done, that is my closing statement. Thank you for joining us. We do appreciate it. Hopefully, this episode has been informative to you. If you like the information and you like these episodes, please subscribe, hit like, follow us on YouTube and Instagram and Facebook. Right ahead, Stacey.
And if you have a question or think you might want to have a consultation, you can email us at info@cigarsandtaxes.com.
Here it is.
Thanks for joining us, guys. We'll see you in the next episode.
See ya.